Hey guys, welcome in and thank you for joining me today. Hope you guys are doing well this Sunday. All right, so today we got some very good stuff to talk about. So, we're going to talk about the Trump tariffs and we're going to take a look at the stock market and see why the stock market is crashing and see if there's some possible opportunities in the stock market where there might be some amazing buying opportunities. So I want to mention I am a licensed financial professional in the financial industry with 10 years of work experience. So this is what I do for a living and on a daily and regular basis. So I feel like I'm well equipped to talk about this. And also, I want to mention that on my YouTube channel, I create content about money, sports, and personal topics with the goal of bringing value to other people's lives. So if you guys find value in my videos, consider subscribing to my channel, to my YouTube channel, so that I can continue making these videos. All right, so I think we're gonna break this down into three different sections. So number one, we're gonna first talk about the Trump tariffs and just see what they're all about. Number two, we're gonna take a look at the stock market indexes. So the Dow Jones Industrial Average, S&P 500, and the NASDAQ Composite, and see what those indexes have been doing in the last few days. And number three, we're going to take a look at some specific stocks and see if there's some amazing buying opportunities. And I will give my personal opinion about what I think is the best stock to buy at this time, with the stock market going down significantly. So, good stuff to talk about. So, let's jump into it. All right, so let's talk about Trump tariffs. So on April 2nd, this past Wednesday, President Trump announced that he will be establishing reciprocal tariffs on many, many different countries. And he had a big list of all the countries, that he's going to be doing that on. And this is something that he promised he would do during his campaign, so he's deciding to implement it now. So, as far as tariffs, so what is a tariff? So, a tariff is a tax on goods imported from other countries. So, companies buying foreign products, they're going to be paying those tariffs that are imposed on them. And as a result, the companies will face higher costs, and that's typically passed on to the consumer. So, what Trump is arguing is that these tariffs will protect the US industries from unfair foreign competition and it will raise money for the federal government. But since a lot of things that we buy today relies on a global supply chain, steeper tariffs usually means that consumers will see higher prices at the grocery store, at your next car repair, and so on. So basically, with tariffs, so let's say you're buying, or a company's buying a car outside the US in China. So if a tariff is imposed on, buying cars from China, US companies and US consumers are going to be paying more to purchase a foreign car from China, or let's say Japan is the one who makes cars. So the point of that is to make foreign cars and thus imports more expensive, with the goal of making consumers in the U.S. buy domestic cars in this example, so that would increase production in the U.S. and help out the U.S. economy. But like we mentioned, so many things that we buy, are outside the U.S. So even though the tariffs would help probably increase production in the US and consumption in the US, because so many things that we buy are outside the US, it will make a lot of things more expensive and cause higher inflation for the everyday consumer. So just in economics, when you increase one economic variable, like in this case, Trump wants to increase production in the US and help out a lot of different industries in the US with the tariffs. That's going to come at a cost of another economic variable, meaning there will be higher prices and higher inflation for everyday goods and services. So this is kind of the trade-off that's being faced, but that's kind of the goal behind the tariffs. So, and we can see on this chart here that when Trump was making his announcement, he had a list of all the different countries and all the different tariffs and percentages that he's going to impose. So we'll see what happens there. So just in my personal opinion, I believe that, these in general, these tariffs are a bad economic, tool in the long run. But I believe that Trump is just implementing this in the short term to kind of influence other countries and trading partners to start to negotiate about their tariffs on the US and to try to decrease their tariffs on the US so that the US gets better and more fair trade deals. So I don't think this is actually an actual economic policy that's going to last for a long time. It's just a negotiating tool that Trump is using to get other countries again to the negotiating table and get better trading deals for the U.S. So that's what I think Trump is doing here. All right, so next we're going to take a look at the stock market indexes, specifically Dow Jones Industrial Average, S&P 500, and NASDAQ Composite. All right, so after Trump made that announcement about the tariffs, sometime after that, China responded back and they implemented a new tariff on US goods at 34%. And as a result of those news and further expectations that other countries might do similar things as China, the stock market just went down significantly, and it it hasn't gone down this much since probably COVID times in 2020. So let's take a look at these stock market indexes and see what things look like. All right, let's take a look and see what the stock market looks like. So on Friday, the Dow Jones was down 2,200 points, which was a decline of 5.5%. S&P 500 was down 322 points, which was a decrease of almost 6%. And NASDAQ was down 962 points, which is 5.8%. So as we can see, this is just in one day. On Friday, all three of the major stock market indexes were down significantly, 5 to 6%. So, this is very rare. And, if you're an investor, the downside is, yeah, your portfolio is taking a hit. But then if you look at the glass half full, the market is significantly down. So this might be an amazing buying opportunity as well. So depends how you want to take a look at it. So let's take a look at each of these indexes and take a look at their charts. So we're going to start with the Dow Jones. All right, so this is the one-day chart here. So like we mentioned, it was down significantly, 5.5%. All right, over 5 days, we can see it was around 42,000 to start off the week. And then we have the significant drop here. It's down to the 40,000 range. And it ended the week at around 38,000. 1 month chart. So we can see it was pretty steady for the whole month here. And then the significant decline starting April 2nd. 3-month chart. So it was all the way up in the 44,000 range. Over 1 year, we can see the Dow Jones consistently went up. It had dips every now and then, which is normal. And then we see this significant decline here recently. 3-year chart. So you can see all the dips here. And anytime the Dow Jones dipped, you can see that it recovered pretty quickly. Like we see dip here on November or October 27th and significantly went up. Dip here, it goes up. So this is just what it does. We have a dip here and it goes up. And now we are experiencing the current dip, which is here. So, just based off looking at the chart, the historical chart, we can see consistently that whenever it went down, it's recovered. So my personal expectation is that the same thing will happen here and that this will end up being an amazing buying opportunity for investors. So this is the 5-year chart. So we see the dip here at the beginning. It goes up for all this time. Dip right here. It goes up. Consistently just been going up with a few dips here and there. And now we're at this point at 38,000. So my personal expectation is that, after some time, a few weeks, couple months, my expectation is that the Dow Jones Industrial Average will recover and it will resume its upward trajectory and get back to the levels that it was previously at. And we can see the max chart here. So this is 2008, significantly went down. Since 2008, just consistently going up. Significant dip right here. in 2022, but then it significantly went up. And now we're at this dip right here. So again, my expectation is that after some time, after it bottoms out, that again, it will resume its upward trajectory and resume going up. But we'll we'll see if that happens. All right, let's check on the S&P 500. One day chart, very similar story. 5 day chart, we can see it was consistently at these levels here, 5,600. Tariff news comes out, significantly goes down. China retaliates, another significant decrease. So this is 1 month, 3 month chart, 1 year chart, 3 year chart. So again, significantly went down here. October 27th recovers nicely. October or April 19th significantly goes down, recovers nicely. And now we're going through this significant dip and decline. Again, my personal expectation is that it will recover and get back to the levels that it was at, after some time. So we'll see if that happens. 5 years and max. All right, let's take a look at the NASDAQ index. So all these, indexes, even though it's different companies that are within the index, they all have a general pattern that they follow. So the NASDAQ, 1 day, 5 days, 1 month, 3 months, 1 year, 3 year chart, 5 year chart. So we can see even in 2022, when the stock market went down, all the significant growth that it's had in the last 2, 3 years. So this is just normal to go through another correction. And once it bottoms out, again, my expectation is that the NASDAQ composite will get back to the levels that it was at previously and resume its upward trajectory. All right, guys. So just to kind of summarize on the stock market indexes before we move on. So we saw that all three of the major indexes, Dow, S&P 500, and the NASDAQ, they're significantly down on Friday, also significantly down this past week, down around, you know, 10%, if not more. And we looked at the charts for all three of them. So, this is not an easy time. Anytime you're going through a serious market correction, the stock market is going down significantly. Um, it's definitely anxiety provoking, but I believe that no one should panic. That I believe that this is a great buying opportunity for long-term investors. We saw the charts every time the indexes went down significantly. After some time, whether that's a few days, few weeks, few months, the index has recovered very nicely and had significant growth. And my expectation is that the same thing will happen this time around. And when we look back on these indexes in a few months, weeks, months, you know, next year and years, I think wise investors will look back and say that was an amazing buying opportunity. Um, so that's what I think about the stock market serious decline, if you want to call it crash, these past few days and weeks. So that's what I believe is going on and what's going to happen going forward. All right, so next we're gonna take a look at some specific stocks and see how they're doing this past week, and then I will tell you guys the stock that I think is the best stock to buy, in the current market situation. So let's go ahead and do that. All right, so the first stock we're gonna take a look at is Amazon. All right, so the stock symbol is AMZN. So we're going to take a look at the 1 day chart. So Amazon was down $7.41 on Friday. It was down over 4%. 5 day chart, stock was down $11, which is down 6%. You can see the stock was around 196 and now it's 171 range. So, basically it's gone down about $25 from not too long ago. So 196, 171. So you can see just how much it's gone down. Three-month chart, the stock was $235 in January, and it's consistently gone down. So this is the 1 year chart. So the stock was at around $242 in February. Now we're at again 171, so that's around $70 lower. This is the 3 year chart, 5 year chart, and the max chart for Amazon. So you can see just from a historical perspective, you can see this large decline here. And look how much Amazon recovered since then. And now we're going through a similar thing, a very large decline here. But my expectation on Amazon is that, after some time, the stock will bottom out, it will recover and get back to the previous levels that it was at. So this might be a good buying opportunity for Amazon. The next stock we're going to take a look at is Meta. So Meta Platforms, which is basically Facebook. On Friday, the stock was down almost $27, down 5%. 5 days, it was around 580, so it's down around $80 since then. 1 month chart, 3 month chart, 1 year, 3 year chart, 5 year chart. So we can see that in 2022, when Meta went down significantly, it recovered so much since then, all the way up to around $730, $40 here. And now the stock is going, through a decline here, a correction. So we'll see what happens there. So my expectation on this one is that, it will bottom out eventually, shortly, and that Meta stock will get back to its previous levels and continue its growth trajectory. So I personally believe that, this is probably a great buying opportunity, and great opportunity to be a Meta investor. And let's take a look at the max. So we can see again on Meta, anytime it's gone down, like here, the stock recovers. It went down significantly in 2022. The stock recovered significantly since then. Now it's going through a little bit of a correction, like with all the other stocks. So my expectation again is that it will eventually bottom out here somewhere, and then it will resume its upward trajectory and get back to its previous levels. All right. So next, I want to share the stock that I think is probably the best buying opportunity. In the current situation with the stock market going down, and that stock is Alphabet stock, or also known as Google stock. So Google stock on Friday was down $5 or 3.4%, around 6.5% over the 5 days. 1 month, it's down around 15%. Over 3 months, the stock is down 26%. So the stock was around 200. Now we're at 145. So that's, $55 decline, which is quite significant. 1 year chart, 3 year chart, 5 year chart. So I think Alphabet or Google stock has the best looking chart. So we can see that in 2022, after the pandemic, the stock just consistently went up. And then in 2022, like a lot of other stocks, the market was going through a correction, and then it bottomed out. And then ever since then, 2023, 2024, the stock has just consistently gone up. So it was around 190 right here in July of 24. We have a bit of a correction, and it goes down significantly to here, to 150. But then since then, very, very nice recovery and going up to the 200s, $204 in January of this year. And now the stock has gone down to the $145 level. So we can see that every time the stock has gone down, all those bottom points were very good buying opportunities. And I think the same thing is happening here. So I think even though it's scary, um, I think wise and intelligent investors look at these times as opportunities. And I think when we look back, when the stock recovers back up to the 200 level and even further, I think investors will take a look back at this time period and say, that was a great buying opportunity. And this is the max chart for Google or Alphabet stock. We can see just consistent growth over all the years. Even in 2008, it recovered quickly and just consistently gone up. We see a significant correction into 2022, but if you were wise enough to buy it at that time, you had significant gains the last few years. And here's another opportunity. The stock is significantly down, and in 3, 6 months, in a year, 2 years, 5 years, 10 years, you want to look back on this time and say, I invested in Alphabet stock at this time, and I had all the significant gains since then. So go back to Google here. So that's what I think about Alphabet stock. I think that this is a rare buying opportunity for potential investors. You want to buy a stock when things look a little scary and a little shaky. That's when you make the most money. So that's really all I wanted to share as far as the specific stocks go. All right, guys. So, just to kind of summarize everything. So, number one, we talked about the Trump tariffs. Number two, we looked at the specific stock market indexes and just how much they're down. And then we took a look at a few specific stocks. And I, gave my opinion that Alphabet stock, or also known as Google stock, in my opinion, is the best buying opportunity in the current situation in the market. And I hope you guys liked the video. If you did, again, consider subscribing to my YouTube channel so that I can continue making this content. And we'll go ahead and leave it at that. And you guys take care.